Well, hello, welcome back to my channel, Survive and Thrive. And today I wanted to cover a company that I went over in my last video 2 months ago, and that is a spatial data platform company, Matterport, ticker symbol MTTR. And if you look in this upper right hand corner, you can go to the video that I had done on this about 2 months ago, like I said, and you can check out more details about what this company is about. But it's one that is going to be part of what everybody talks about with the metaverse. And in this Yahoo Finance article written by Will Ashworth, he talks about the fact that the Matterport platform is being used for the construction industry, but there's also opportunities for them to be using it for 3D spatial recreation for real estate, which they are doing, warehouse planning, and many other uses that are going to be coming to them in the near and long-term future. And there's even been talks that they're in the works with Facebook, now known as Meta, in being able to incorporate their services there. Now, as of this article, Matterport was losing a considerable amount of money as it generated $21.9 million of losses for the first 9 months of 2021 on $84.1 million in sales. Now, if we look at Matterport's total addressable market, the company's June 2021 presentation to analysts showed that it generated just $4 million in annual recurring revenue from its top 10 potential customers. However, it estimates that it could eventually generate $120 million annually from those same customers. Thus, its potential is significant. And that was a reason why I had covered them just a few months ago, because I saw them as a company that I knew about from my own work, and seeing that contractors and architects are using this software on a national level. And so when you start to see that happen and see that there is opportunities for them to grow even further, I became very excited about this company and wanting to jump in and invest. And I do have a holdings now. As of the video that I had last done, I was on the fence, but I did get in around $20 per share, and I know that we got hammered last week, so I'll go over where they are at currently and whether or not now is a good time to buy in or if you should wait. Hostess's merger presentation from February suggested that its total addressable market was $1.2 trillion. If it gets 5% of this market, its annual sales would be $60 billion. In the 12 months that ended in September, its revenue was $85.9 million, a far cry from $60 billion. Now, don't think for a minute that Hostess's annual sales will actually surge to $60 billion. If this author believed that, he'd sell everything and wait for his multi-million payday around 5 to 10 years in the future. But if you are concerned that Matterport's revenue in Q3 only increased by 10% over the same period, don't be. It continues to transform its business into a subscription-based model from a product and licensing-based one. Last quarter, it had 385,200 free subscribers and 53,800 paid subscribers, or 439,000 subscribers in total. In Q3, its subscriber revenue grew 36% year over year to $15.7 million, accounting for 57% of its overall top line. That was 11 percentage points higher than the same period a year earlier. Matterport's gross margin for subscription revenue is 75%, considerably higher than the gross margin that it obtains from products and services. As its subscription revenue becomes a greater percentage of its overall sales, its profitability will increase. It's only a matter of time. And that is a real reason why I think that this is a great long-term play. I don't think it's in the next few years. I think it's in the 5 to 7 to 10 year range that you want to get in here now and really build out your position. Make sure that you're doing your own research, really reading into the valuation of this company and what you think is a fair entry point, and then finding that opportunity to really buy in, and buy in heavy if you have strong faith in this company that they will perform in the years to come. As this author said at the beginning of this column, if you can get MTTR stock in the teens, you should run, not walk to buy some. For those who are looking to hold on to the shares for 3 to 5 years, there's an opportunity to make a significant amount of money by buying them at their current levels. That said, you can expect the shares to be quite volatile in 2022, which it already has been. And I'm going to go over just that chart and history for the share valuation to show that. But make sure to put aside some funds to buy the name under $20. This Motley Fool article, if I could invest in only one metaverse stock, this would be it. The key points that are talked about: Matterport's technology is helping consumers and businesses bring their real-world spaces to the cloud. This has numerous use cases for not only today, but for the next decade. While the company is experiencing some hiccups, it is worthy to be on your watch list. According to Google Trends, consumers' search interest in the term metaverse has grown 10 times over the past 3 months. Now, this was an article from last year, and I know everybody has seen many videos and the media, as well as other social outlets out there that are talking about the metaverse. The term is now widely popular in nearly all 50 states. With so much of the population warming up to the idea of the metaverse, now is the time to look into some stocks that could fuel its growth. And I think that, as this article states, that Matterport is going to be one of those huge contributors to the metaverse, and is going to be one of those companies that leads in this effort. It is enabling companies to bring their real-world spaces to the cloud, and the technology could also be used to help consumers bring their homes or other favorite places into the metaverse. Here's why this author would look into the metaverse play if he could only choose one. Matterport's 3D technology is simplistic and can be used on anything from high-quality cameras to your mobile phone. Its 3D capture solution allows you to take images of your space and upload them to the cloud. With this, you can do a wide array of things, including potentially bringing an image of your space to the digital world. The company has historically relied on the revenue from selling its high-quality 3D cameras, but now that it has made its products available on both Apple and Android devices, its subscription revenue is growing rapidly and becoming the primary revenue source. The digital movement, what appeals about Matterport is that its use cases are extremely vast, including the construction, industry, and hospitality. The 3D captures, called digital twins, can be analyzed to ensure space optimization in a retail store or looked at to find weaknesses in a building. It can even be used in the insurance space to reduce discrepancies in damage claims. With this optionality, investors in Matterport can still win even without the metaverse. And that's why I think, because of the way that Matterport has diversified, that this is a great play to be able to take advantage of that technology aspect of it and be able to leverage the metaverse, but then also still have the potential to make money on other ventures that they're involving themselves with. The metaverse has yet to play out, but Matterport's technology has been widely adopted already. The company has over 439,000 subscribers across these different industries, with over 6.2 million spaces under its management. This could be a drop in the bucket if Matterport can capitalize on the metaverse. If billions of people across the world want to bring a digital twin of their favorite park or their local baseball field to the metaverse, that could be a large amount of growth potential for Matterport. Another important aspect for Matterport is its global first mover advantage. The company is the only pure play that offers this kind of scale for creating digital twins, and it does this across the world. The company operates in 170 countries, so they are very well dispersed throughout globally. And let's get into this aspect of the article as a long-term investment. Matterport is starting to see growth ramping up. Now that its software is easily available, the company is seeing strength in its subscription revenue rather than just its hardware. This is for the better because the company's hardware gross margins are just 17% compared to software's 75% margin. But hardware revenue still makes up 30% of its total revenue because it will take time for its subscription revenue to materialize and grow exponentially. So an investment in Matterport should be a very long-term investment. The company is also very young. It was founded in 2011, but it has just $27.7 million in quarterly revenue. An appealing hybrid stock. Even without the metaverse, the company sees an addressable opportunity of 240 billion, and who knows how big the company's opportunity is with that addition. It trades at a high multiple of 66 times 2020 sales, and while this high valuation is absurd when looking at current financials, its valuation is based on the huge opportunity ahead. The company will face plenty of challenges over the next decade, but if it can successfully capture some of its addressable markets, it could become a multi-bagger from today's prices. And that is the real reason that I'm behind them today, because I do believe that they can be at the top of this industry and be able to really diversify, make the right acquisitions, and build into a powerhouse. So along those lines, this article in Investor Place, MTTR stock alert, the latest acquisition news sending Matterport higher. AI fans are cheering today after spatial data company Matterport reported completing its acquisition of Enview. Matterport acquired Enview for a purchase price of $1.59 million Matterport Class A shares valued at $0.0001 per share, plus $35.5 million in cash. In exchange, the deal grants Matterport sole ownership of all issued and outstanding equity interest in Enview. Enview offers a variety of development benefits to Matterport, with the main highlight being its 3D AI platform. So that is yet another disruptor technology out there, artificial intelligence, and so very smart play for them to get that acquisition now. Enview's technology is used in everything from infrastructure protection to automating property analytics for insurance and disaster recovery. This is likely much of the logic behind the acquisition. RJ Pittman, Matterport chairman and chief executive, commented on the apparent match made in heaven. We turn buildings into data, and for the next decade of growth, our focus centers on unlocking the power of that data for our customers around the world. Enview's powerful spatial data analysis technology fits right into this strategy and readily complements the platform for Matterport. Together, we can deliver breakthrough building analysis and data insights to our customers, including automated building inspections, AI-powered space planning, and property utilization analysis to deliver operating efficiencies in a completely digital environment. Now, Enview was founded in 2015, and its platform is in use in a number of both public and private sector capacities currently. As such, it makes sense why the high-profile acquisition comes as a bullish signal to investors. And I think that Matterport will continue to make these acquisitions and smart business plays as they continue to develop, which will send their share price soaring. Make sure that you're doing your due diligence, really understand this company if you want to jump in. And I want to show you some price action history just to go through and see if now is a good time to buy or if there is an upcoming opportunity for us. You can see here why bears are circling around the Matterport stock, and this particular author is stating that the stock is likely to keep dropping through February. Now, as of the time of the SPAC deal that took place, the price action went from $10 to $33 in that range. They're currently at just under $16 per share. Last month, however, this author was cautious on the shares at their new higher valuation, suggesting that investors should wait for 2022 before buying the company stock. There are still a few worrisome signs for Matterport that investors should consider before purchasing its shares. They had a revenue miss. As highlighted in a previous article, Matterport has been making some adjustments to its business model. In particular, it is moving from one-time licensing fees to recurring subscription fees. This sort of transition tends to be bumpy. Companies typically report lower than expected earnings for a few quarters, and that would obviously create some volatility within the share price and be a downward driver. Indeed, this phenomena impacted Matterport's most recent earnings report. For the third quarter, the company reported just $27.7 million of revenue. That was way below analyst average estimate of more than $29 million. Making matters worse, the company slashed its full-year guidance, implying that bad Q4 results are coming as well. The midpoint of Matterport's 2021 revenue guidance range is now just $108.5 million. That's way down from its previous midpoint of $123 million. Now the bears latch onto any inconsistency. Matterport blamed its Q3 revenue miss partly on supply chain problems. A big chunk of Matterport's revenues comes from selling cameras to clients so that they can film their facilities and create 3D digital models of them using Matterport software. The cameras are not very profitable, but they are vital for driving users to the company's subscription and service offerings. Given the shortage of semiconductors and other components of the cameras, Matterport's inability to manufacture enough cameras to meet demand made sense. So the fact that its hardware sales came up a little short of the average estimate is no big deal, right? However, one astute analyst noticed that Matterport is significantly discounting its cameras. Many are wondering why Matterport is choosing to offer sizable discounts on its hardware if it isn't able to manufacture enough of it to keep up with demand. Consequently, short sellers are speculating that there is not a great deal of demand for Matterport's cameras. So you've got to be really careful, especially with the companies out there that are just getting associated with metaverse, because you can get bit pretty quickly. A lot of this is based off of speculation and not real fundamentals. And so make sure that you're really doing a fair amount of research before you figure out what is a fair valuation entry point. And at the end of this article, the verdict on MTTR stock: the next 2 months could be treacherous for Matterport shares. Later this month, there will be a lockup expiration on a massive number of its shares owned by insiders. And then, in February, Matterport is due to release its Q4 earnings. So depending on what happens with those two events, they could be catalysts to further drive down the share price, which would create an even better opportunity for you to buy in. So for me, I may just nibble, as we are under the $20 mark where I first got in a position just to lower my cost basis. But I also may wait here to see what happens here in the next month. And like I said, there may be an even better opportunity for you really to jump in and load up for the long term. As you can see, if I go to the year chart and I go back to early November, I had bought in around the at the $20 mark per share. And it did have some great news and catalysts going along with the metaverse, and got all the way up to $33 per share as of the end of November. And then they've come back down quite a bit. And so I do think that anywhere under $20, definitely on my watch list. At $15, a place that I would like to acquire some more shares and continue to build my position over the next several weeks. But if it gets much lower, then I'll be loading in pretty heavily. And so that's an aspect to watch for as you're watching some of these new companies, is just to really pay attention to the news, because it does impact the share valuation. And especially with as volatile as the market is going into 2022, with the Fed stating that there could be up to 3 interest rate hikes at 0.25% per hike, that can also be a downward catalyst for any company out there, and especially for some of these newer technology companies. So that's really what I wanted to cover today. I'm continuing to build my community. I want to get to 1,000 subscribers this year, and I need each and every one of you to help me do that. So the last video that I had done on Matterport, I got to almost 1,000 views in a relatively short amount of time in the last few months. And so I'm hoping to get this video to do the same. And if you've gotten value, definitely smash that like button. Help us help out with the algorithm to get this out to other viewers and really be able to build this channel. Make sure that you hit the subscribe button, turn on that bell, as I continue to do my weekly uploads on content covering everything from stocks, NFTs, NFT gaming, NFT music, as well as financial strategies on your path to financial freedom. If you have comments about Matterport specifically or other metaverse stock options out there, please make sure to list those down here below so that others can learn. And I will also put this video up in the upper right hand corner where I talked about 5 different companies related to the metaverse to get you started investing in that realm if it's something that interests you. That's all I had for today. Make it a great week. Keep your ear close to the ground and look for those opportunities to make the biggest gains in 2022. Don't just survive, thrive!